this is a wake-up call. I think the action that we're seeing today, the action that we saw yesterday in the markets is a wake-up call to investors that if you had a portfolio that has been very heavily overweight in technology, in some of these stay-at-home COVID-proof names, you've done very well in 2020, but that may not be the case in 2021. If the vaccine news from Pfizer and other companies that are scheduled to report some of the clinical updates, if those vaccine news continue to move in the positive direction, then there's going to be more to invest in just technology shares. So it's not to say that we have to get out of all technology, but it is to say that there's more things that are investable right now or becoming more investable over the coming 6 to 12 months. And specifically, we looked at 3 categories, all of which are actually performing really well today. The first is the mobility category. So, and maybe maybe they're not performing well today, but they were yesterday. But think airlines and think some of the rideshare services. If we are seeing people venture out of lockdowns and actually get on a plane, get in a car, that's going to be a significant boost there. The second category that is holding up really well today is multifamily REITs, apartment REITs. Those things are actually still collecting pretty significant rents, like 96% of what they're billing, and they are going to be significant beneficiaries of the vaccine improvement environment. And the third thing I want to point to is banks. Banks are actually doing quite well today as well, despite the sell-off in the NASDAQ shares. So, Will, the short answer to your question is I don't think this is a 1 or 2 day trend. I think there's more to it, and this is a bit of a warning sign to investors to say this might be what's to come in 2021. So let's make sure our portfolio allocations are a little bit more balanced.
Shepard Smith here. Thanks for watching CNBC on YouTube.